Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
Welcome to the Mortgage Market Minute. I'm so sorry that Tom is not going to be able to join us today. He is not feeling well. Not sure if he's got the Super Bowl syndrome or not, but he said that he was under the weather, couldn't breathe. And I'm going to tell you, I'm going to take over from here and see if I can somehow fulfill Tom McNamara's shoes. But I hope you feel better, Tom. I really do. But let's get right down to some news. So there's a lot of activity happening right now. Everybody should be very enthusiastic about the economic situation. So let's get right down to it. I want to share a screen with you. So this is exactly what's going on in the bond market. Now, since you all listen to me, whether you're looking to buy a home, sell a home, real estate agents, builders, I want to always make sure you're the smartest people in your group so you know what's going on. We want bonds to be up, not down. Bonds going up, lower interest rates on mortgages. The Fed does not have any impact on what happens to mortgages. So we don't care if they cut them, raise them, do whatever they want to do. We prefer that they just leave them well enough alone. Bonds are starting to do their thing. So today, Monday, the bonds opened up nicely. They were a little bit higher earlier in the day. We can look at the bond chart here. We can see, if we look at this chart, that things were a little bit better when it opened up, but we are up on the day. Now, if you look at this chart, we can see exactly what's going on. These lines are indicators of the moving averages. So right here, we've got the 200-day moving average, the 100-day moving average, the 50-day moving average, and the 25-day moving average. Now, we've pierced above these. We were above the 100-day moving average, the 200-day moving average, but we are now below it. We need to pierce it and stay above that moving average. And then we've got a ways to go. Let's just look at some history. We go back over to here. That was in December. This was in September. Do you remember September 18th? The first day the Fed did the Fed cut. Look what happened to the bond market. Now remember, we want bonds to go up, not down. Then the Fed went, uh-oh, we got a problem. Let's lower the Fed rate again. And it got better for one day, and then it got worse again. Then they said, wait a minute. Things started to get a little bit better, so they thought they'd make them even better. And right here, they lowered the Fed rate another quarter point. And then look what happened. We just got worse and worse. So now, the bonds are starting to do their thing and improving without the assistance of the federal government. So hopefully we can maintain this track. Remember, if we can get up into this 1025 range up here, way up here, if you can see my chart, that is when we're going to get down into the low sixes again. So keep your fingers crossed. That's what's going on here. Now, let's go in and I want to mention a couple other things. Have you ever known somebody that wanted to buy a home? Maybe they're of retirement age. They had lots of assets, but they did not have enough income to qualify for the type of loan they wanted. Well, I have a technique and a system by which I can take an asset that you have, an IRA or a 401k, and I can convert that asset into income to help increase the buying power of your clients or of you if you're of retirement age. That's a great tool to use. So you don't have to put so much money down. You may have more income that can be used to qualifying than you may think. We're experts here at Cross Country Mortgage. We will do everything we can to find any possible way we can help our clients succeed and achieve homeownership the way that they prefer it. Now, one other thing. You ever get spammed by things on the internet? You're getting, it's because you're doing things that bring on the attention. When you purchase something that's free, like TurboTax, when you go on Zillow, when you go to Credit Karma, when you do that, you are now their product. You are being sold. So as soon as you go to Zillow or you do your TurboTax, if you're not paying for TurboTax, you have become you have become the product. So they will sell your information off. I don't like my information being sold. And I already know it's being sold more than it should be. But I want to try to mitigate that. Do you want to mitigate that? Then don't go to Zillow to look up your property value. I created a system called Homebot that I give to my clients and my real estate agents for free. It allows you to search your property, determine your value without you being sold to 50,000 real estate agents across the country. So don't do that. When it comes to reporting your tax returns, do them yourself or go to some place like H&R Block or hire a professional, but don't do them for free. You're getting your data sold. Things like that can change it. If you have want your credit pulled, go to annualcreditreport.com. It's free. But when you go to Credit Karma, as soon as you go to check your credit, you're being sold to everyone that wants to sell you a product that thinks you're looking for financing. So if you're trying to reduce the amount of spams you get, robocalls, your emails clogged up, just listen. You can make it easier on yourself. If it's free, it's too good to be true. That's the Mortgage Market Minute. Now, if you're looking to buy or sell a home, Tom McNamara, one of the best in the business. He can operate in all 50 states. I lend in all 50 states across country. We have every tool you can think of: bridge loans, reverse mortgages, second mortgages, home equity line of credit, down payment assistance, VA, FHA, USDA, construction to perm loans, renovation loans, you name it. I got it right here. Self-employed, all you self-employed people, bank statements. Leave your tax returns at home. I don't want to see them. Send me your last 12 months bank statements. I'll take care of you on a bank statement transaction. We can help you with no matter what your needs are. That's the Mortgage Market Minute for the day. I hope you have a wonderful week.